Hey guys, welcome back to a Bagscast. This time, I've got my good friend Maxwellhouse from Charts for Charity, and we met each other through Charts for Charity. It's been a couple of years now, but anyway, shout out to all our gang at CFC, Short Seller, Big Greenie, Same Day Jeremy, all the guys. We love you. We appreciate all that you guys do. But I wanted to have Max on because we do things a little bit differently, but also similarly. I don't know anyone outside of myself that uses parallel channels, as much as me and Max. So without further ado, Max, welcome. Thanks for hopping on, and I'm really excited to talk some parallel channels with you.
Yeah. Thanks for having me. Happy to be here.
So I've gone over it in one of my lives or one of my TA sessions before, kind of how I set up my parallel channels. I mean, I use a line chart, and I kind of try to find the bottom of support, draw my parallel channel, try to find the top, and then turn the candles on and kind of tweak where they actually are. But you do it a little bit differently, and you don't use TradingView as much as I do. So if you want to take a couple minutes, maybe show how you set up a chart. I think that'd be really helpful.
Yeah. Can you see my screen? Okay.
Yeah.
So we'll start with just an SPX here. And so this is sort of just the basic. There's a lot of lines on here, but you pay attention to the solid lines is what I give the most precedence to. That's what I use to draw all of my extensions that come off from it. And so we can just take a new board. We'll just do an example here. So I'm going to just connect a line that I think is the most clean, the most relevant. And all you need is one line, because from there you're going to have a channel that you're going to make from that. So you're going to redraw it as a channel. And then you're going to find another line that sort of matches up with the most points. And so I don't really care about wicks and bodies and closes. You just try to find what hits the most number of candles in the most clean way. And so It's kind of like an art form. It's not a science. And so, once you add the extensions on, you'll be able to sort of get a bit more confirmation on what you're looking for. And so I use, 0.5 increments. So, you add them on like this, and you're going to get these extensions that kind of pop off from here. And so then once you have these on, you can sort of adjust the width or the angle, the slope, and then you sort of just get a bit more confirmation. See how this starts to hit down here? So you're like, okay, well that looks right.
It's like magic.
Yeah, just like magic. And they sort of just line up, and I didn't used to do this a couple of years ago. It's pretty recent. But I just found that
You're welcome.
Yeah, I guess I could give you credit for that. But and then you just sort of you try different ones, see what lines up. And eventually you start to just get a good feel for what the channel actually looks like.
Yeah, I think one thing that when Cookie and I talked, he talked about DNA of the chart, or of the stock, and I think sometimes he does things way differently than what we do, and again, it's more of an art form instead of a science. And I think what we do is we find those visible support and resistance zones with parallel lines, and it's amazing how often they hit. Now, that doesn't mean like on this chart here, right? You've got, I don't know, a dozen or more lines. That doesn't mean that one line is the end all be all. There's still levels that it can go above and below, right? And it's just adding those on. But it's really crazy how price comes into contact with those lines more often than one may think.
Exactly. Yeah. And you have to kind of adapt to it, right? Because it'll start to break above, and you got to add more extensions. The market's breaking out, it's going higher, and where it goes is very interesting to me, right? Because you break out from this one channel, you go to the 0.5, which is its dash line, You go duplicate that again, you go up to the green, and then you get consolidation. So they move in these periods of equidistant moves where you're going to break out from one section of a channel and move in the same distance again and again. And look where the top was. It was 0.5, 1.5 above the main channel. And so that's where you saw the retracement. And so, if you want to think about where this oval is, right, this is a back test of the long-term channel that I have identified. And that's, if I were to get the market down here, that'd be an all-in signal for me right now. That would be a gift. So, I mean, just identifying where these points hit, and then you can sort of extrapolate upwards. But, not to say that they're also giving precedence to, the dashed lines aren't as important as the solid lines. And so that's sort of why I mark them as differently as such.
So for me, a bit of a different way that I look to set up my charts, I try to go back as far as I can, right? So I want to go back to, if I can get the oldest weekly or the oldest monthly chart, that's kind of where I like to start. And then if, and I'm going to take over the screen share real quick.
Yeah, and I believe you, and we can talk about time frames too. I agree. Like the longer view you can have, the better. You're going to get a better picture of whatever the stock or whatever you're looking at.
Yeah. So if I look at, let's say, AMD, we were showing AMD earlier, right? AMD's got an all-time channel that's way back here, right? And then I find a new channel inside of it, which it's what it's been on since basically 2015. So I have two different types of channel time frames, and I find that helpful for me. I don't think it necessarily is a necessity. I mean, especially if, right, you're entering a new position, or you're trying to figure out what price actions is going to do in the shorter intermediate term. A lot of times this longer term channel doesn't really mean as much as, a near term one. And I think that might be one area where you and I might do things a little bit differently, but at the end of the day, we're putting parallel lines on a chart that are equally spaced, and I'll be gosh darn if we're not hitting trends, right?
Yeah, I'm going to challenge you a little bit, and I'm going to ask, so for your channels, I just feel like there's not enough reactions. So I guess I'm wondering, for your long-term channels, how often are these upper lines and these lower bounds actually, getting hit and being useful for you?
Well, they can be. Let me pull up another one. AMD is not the best, because AMD went from like a 10-cent stock basically to 150 where it is today. But Amazon has probably a much better channel that I can probably show you, and I don't think it's a challenge. I think it's we're sharing with each other, and people who find this kind of dorky, geeky stuff interesting. So if I pull up Amazon, I actually want to pull up a clean Amazon, so bear with me just another moment. If I pull up a clean Amazon here and just start from the start, always logarithmic. And this is just going to be rough. I'm just going to do this on the fly because I know what my Amazon chart looks like. It looks kind of like that. So in general, there's not a lot to the top and there's not a lot to the middle, right? But just like you add those extensions in, when I start making channels inside, then it becomes a whole new thing. So sometimes the long-term channel sets up what we're looking at more recently. AMD was just a poor example of how that does that. See how the midline's getting popped and popped and popped and popped there. So this is, to me, this is more of a true being able to use a longer term channel as opposed to what AMD is. Now, if I go and look at Xilinx, but Marvell actually hit the long-term channel breakout earlier this year. And I'll go to my real chart on Marvell. So back out, you can see the midline of the channel here. And I turn it down because it gets to be too much. So it broke through that midline, back in October, right? And that had been a source of resistance a couple times. So while the main extreme tops and bottoms of channels may not always come into play, when I divide them or use a half a channel or a quarter of a channel, that's when I feel really confident in my longer term channel.
Yeah, no, and I get that. I guess the point in me bringing that up was just to, I'm looking for things that I can take action on. I want actionable points where I can either take a short or take a long. And so I'm looking for reactions and where I can initiate a position. And so, for example, this Amazon chart, I can draw a long-term chart for the last 10 years. And it's tough when they go from 100 to 3,000. But, you get these places where it goes to and then retraces. And then, every reaction on this white line is a buy until it's not. And so, you get the shakeout and then it rallies back up. But, and it's useful for identifying where something's going to go and where it's going to stop, maybe at inflection points. And that kind of leads into where I am as a trader. And I want things coming to me. I don't like to chase. I'm not a breakout trader. I like to wait for it to hit my point, buy it there. And if I'm wrong, I'm wrong. But at least I'm not like, I'm being predictive of a move and I'm not trying to, follow with everybody else. And
I think we're similar in that regard, because I'll leave a order in and it never fill, and well, I missed it, right? And that's not the end of the world. I'll try to find another setup. But like when things come to you, I was talking about Disney with GP and JFDI earlier tonight. This, by the way, we're recording this on Sunday, February the 6th. At the futures have already opened. But anyway, I was talking about Disney, and Disney's hitting a spot that's a long-term base line for me, or near it. And if it goes much below that, then it's a clear stop out, right? So just like the channels you have here, if that gift doesn't happen in that oval on the SPY, that's not coming into play, right? That was one of the
it's the ideal scenario, right?
You'd love to load the boat there for sure.
I would, but of course you got to trade what the market gives you, right? And so and just looking at QQQ, like this would be my point here, down about 325. It lines up with a horizontal price zone. And at the same time, retesting this blue line, which is the long-term channel that goes back for a decade. And it's super clean. Like, I am astonished how clean this looks. They don't all look like this. So, to get a touch of that is really great. My ideal scenario is we take another leg down, go to 325, and then we can go up. But that might not happen. Who knows?
So when you were drawing your line and you set your baseline for it, right? Are you using, I know you're using half point moves basically in setting your upper and lower lines, but are you using fib extensions on that? Are you just copying that one line? Because I think just having you said that your solid lines are your most confirmed lines and not the dashed or the dotted, but how do you determine, okay, these are my 4 or 6 or 8 lines that are my most important lines?
Well, I'm going to use halves and whole numbers. So, you're going to have a -1 or a 2, and then you're also going to have the halves. And those, I think, are the most important. I also put in these dash lines where price is, because if you're trading the shorter time frames and you want to go down to a daily, you can get these little quick moves, right? You back test the solid, you go to a dash. If you're trading quickly like that, you can sort of react on it. And so, for example, you rally off here, this is a 10% move. Where did we reject? Right at the right at this dashed line. Come back, test this, it's support. So I use kind of both, right? And you can always add and reduce as you need to, but
so your full numbers though, that's based off the one that you drew of the most recent trend, right?
That's right.
Yeah.
Yeah. So the solid blue here is
so the one line that you like best and you feel is your most solid and accurate, that's the one that you use kind of as the baseline.
Exactly. Yeah. And I could draw this again. So just to sort of give this as an example, right? I'm going to draw a line like this, something like that, where I'm going to redraw it as a channel. So once I get my really clean line, I'm going to just find another one that I can connect on the bottom that
where it fits.
Yeah, somewhere like here. And then you can add in your extensions, right? So it's going to be -1, 2. So you're going to get the upper and the lower ones. And then you tighten them up as needed.
TradingView needs to give me this.
You have it. Yeah, Bitcoin. I have a chart on Bitcoin there, but yeah, you could do it. They're called fib channels. Same thing, but I just like the platform here. I'm bought into the whole.
Yeah.
So yeah, it can be really useful and powerful, and I encourage anyone listening to give it a try. I mean, they could be really. You don't need to be perfect, right? I mean, that's what's great about adding these extensions is where you can sort of confirm your bias and play around a little bit, change the width, and as price moves up and makes different reactions, you can always change them because maybe you don't have it right the first time you thought you did, but you don't. So yeah, no, there's a lot to it. I think you can get a lot of benefit out of it.
So Max, we touched on it briefly. We have a bit of a similar style that we'll let things come to us. I get degenerate sometimes on the options, but how do you describe yourself as a trader? What are you looking to accomplish? You mentioned that you'll take some longs and some shorts. I rarely short. I might buy some puts, but I can't even remember the last time I actually shorted a stock.
Yeah, I mean, to be honest with you, I've never actually shorted stock. If I'm going to short, it's index futures or options. But yeah, I mean, you got to feed the degenerate inside you at least a little bit. But I think we're all long here, right? I think if you're not long, you're doing something wrong.
I got to feed the premium sellers.
Yeah, I mean, yeah. So you got to do some of the quick stuff just to sort of keep yourself entertained. But I always have long-term positions on, and I'm always going to be long this market. But at the same time, like I feel like you can trade quickly and do well. And that's the type of market we're in right now. So you're being rewarded for being quicker, selling the rips, buying dips, and not holding on for the big gains because it's going to be gone in a day or two. So I let things come to me, and if I miss a move, that's totally fine. I'm okay just kind of sitting it out. The next one is right around the corner. Like, I'll be honest, like I missed this bounce here, at least on a short-term basis. Like I wasn't able to capture this as much as I wanted to. So I waited, I sold some premium up here and, was able to sort of sit around and
yep.
But I'm okay missing it, right?
There's a new bus every 5 minutes, right? You don't have to feel like you have to trade. And I think that's one thing that, Charts for Charity that we've tried to go over. And, we all do some more risky trades, and we all have different levels of risk adversity, but it's like, try to set yourself up for the best trade, right? And try to, right now, we've been saying, it is a buy the dip and sell the rip. Like it has been that way for, at least a couple of weeks now.
Yeah. And, people are going to do what works until it doesn't. Right. And I think you need to be able to adapt to the type of market that you're in. And so if you're, we're not in an uptrend, in my opinion, like we have broken a weekly uptrend. And so we are now, if you want to look at direction of moving averages, high lows, whatever you want to determine trends, in my opinion, I think we've entered a period of sideways to down. And so you need to adapt and think, okay, well, are these timeframes that are dictating the longer term picture, are they with me or against me? So when you're trading on a shorter term basis, on an hourly, a 5 minute, whatever, you got to have in the back of your mind, like, what are the larger timeframes doing? And so when you're looking at, a weekly chart, or a monthly, everything's a uptrend on a monthly, in my opinion. But, from this point, we're at a weekly downtrend. We've set, a weekly lower high and a weekly lower low. And so, at this point, to change that, you'd have to make a weekly higher high and a weekly lower or higher low and change that trend. So just understanding where you are in the bigger picture, yeah, you can go against the trend, and I do that, and it's fun. But at the same time, you got to respect what the larger picture is doing.
Speaking of, I don't think I've ever seen a chart of yours, and you can tell me if I'm crazy, that has moving averages or RSI or MACD. Maybe I missed one somewhere, but I don't ever recall seeing that. Am I off base?
And when I'm looking at it on my own, sure, I'll have these things on there, and I like indicators for as good as they are. They're not all perfect. If I'm going to pick one, it's definitely a MACD. But at the same time, moving averages can give a great picture of where the trend are. And I put a lot of weight into the position of, which one's on top and which one's, so you have the 10 below the 20, and that'll really dictate where the trend is. So right now they're all falling, at least the 20 and the 50. So this is an idea of where you are in a trend. So, the best case right now is for them to flatten out. And that's, if you wanted to look at a bullish scenario, you need these to flatten out, and then you get above, and then they can start to turn higher. And so, yeah, that's useful in determining what a trend is. You can also just look at, you set on a weekly chart. You don't want to use moving averages. Even these, like, you got the 9 crossing down below the 20. I mean, this, you got to take it for what it is. You can be bullish as you want, but, it looks bearish. So, but, I also want to mention, like, when I'm looking at a MACD, I do look at divergences. You can see, you have, lower highs on MACD, on momentum. I also view this area as something that's going to support. You can do it on shorter timeframes. I think it works better, but there is potential here for this to, turn back up, and you can act like that. So I use them, but they're not the end all be all. If you're going to pick like an indicator, I would go with the VWAP. I think it's a much more powerful tool to sort of dictate, support or resistance. This is, I think, a really powerful indicator. So, if you're looking at ES or anything really, you can have, a point that's the average price from a given peak. And Thinkorswim, this is automatically put in for me, but you have the VWAP from this high or from the low, and then you sort of go to this point. It can act as resistance or support. And so I find a lot of value in this. And all these things really are just to give you an edge. You find what your edge is, you exploit that edge, you master that edge.
Well, and I think that's also important, right? There's no, it's subjective, right? Like there's no one right way for anyone to do it. You gotta figure out what works for you, and then that's what you just keep trying to repeat that process, right? This works for me, I'm going to do it again, until it doesn't. And when it doesn't, then you got to figure out how to go for your next angle. So I think that's exactly right.
Yeah, no, and you can master something and be really good at it. And I also believe that the less people are looking at something, the better it works. So if everybody's looking at VWAPs, well, that's no longer your edge. It's broken. So another thing that I use a lot is expected moves. And so this is an indicator. I think you can also look at it on an option chain, but every week there's an expected movement for a given stock. If it has weekly options, you're going to have an expected move for that. It's just what the option market is pricing in is what that stock or index is going to move for the week. So, next week we have a $8 move in the Qs. So, upper edge is 366, lower 350. And you can see in the past, like these do act as sort of bounds for price, where it's going to reach this, it's going to either stop or at least hold. But the thesis is that, the market's not going to close a week outside of these expected moves, at least 62% of the time. It's on a bell curve distribution.
That's 62% is all right. I would take 62% win percentage in the stock market.
Yeah, no, and what happens if it starts to go out, and you saw that right here where, as it starts to go outside, you start to get these 2 sigma, 3 sigma moves, and that's where you can really start to melt down or gamma squeeze higher.
Right.
So it can be dangerous, especially if you're selling.
Well, which is what we saw, right? We had basically a 2 move down, and then it just bounced right out of it. Now, there's nothing to say that it couldn't have kept melting down, but it didn't. And it's like the rubber band effect, right? The further you pull back the rubber band, the farther it's going to go forward. So I think I really like, I think you and Stink Roach at CFC share these expected moves. And I always like seeing them.
Yeah, no, they're really useful. And you can actually look at, I think on an option chain, you can just sort of look and see what the expected move for the week would be. So what's Friday? The 11th. So you're going to have, it'll tell you what sort of that expected move or what the option market price is in for the movement. But yeah, they can be really powerful tools. But I mean, this all comes into, what is your edge? It could be this, it could be a VWAP, it could be channels. You can look at sentiment indicators. I like looking at sentiment indicators all the time. Big Greenie posts those. I mean, those are gold right there.
Big Greenie is the sentiment channel. Shout out Big Greenie.
Yeah, he's the king. Yeah, or maybe you look at flow, like option flow that can give you an edge, or use DIX, the DIX indicator, which I want to believe, the optimist inside me.
The burger.
Yeah.
So just the inside joke for our CFC crew, like we use the dark pool index indicator, or the DIX, the DIX. And it's been called a nothing burger. So every time somebody posts the number for the day, we give it a nice burger emoji. So it's a big nothing burger. But we like watching it. I do think it's interesting that we're on, I think, 9 straight days of over like 48 on that indicator, and that's crazy high. We've had more 50 plus days in the past week and a half than like a whole year's worth of readings. Anyway, we can talk about this another time, but
yeah, I don't have a chart to visualize it, but yeah, it's one piece of the puzzle that you have in your head what's going to happen next. I mean, that's a bullish one. So
yeah, it is. It's interesting to see how it behaves. I'm looking at it right now. January 24th, it bottomed out at a 37. And then, again, that rubber band effect, 51.4 soon thereafter. And I think, and again, I don't want to have a whole lesson on the dicks here, but Squeeze Metrics, the lemon on Twitter, who runs the site, said that was basically retail shorts capitulating. I don't know that can all be granted toward retail, but yeah, that was a big move, 37 all the way up. But just like the expected move you're showing, when things really get rolling and the pendulum swings one way too far or the other, it's got to come back at some point.
Yeah, and you can play the mean reversions, but yeah, it's one indicator. Yeah, I give some weight to it, but we'll kind of see what happens from it.
Yeah, it's interesting. It's like my stock trader's almanac I got over here. It's just interesting data to know. By the way, I was trying out the fib channels. Can't do any negative numbers.
Really? Okay.
Well, no negative numbers. So I'm stuck with 0 through 0.51, etc. But no negative numbers. I'll play around with that. That would definitely be helpful to me, as opposed to drawing all these parallel channels that TradingView's got me doing.
Yeah, less work and plus a little bit more accurate. I do have go ahead. Yeah.
No, I was going to say, what do you see for the week ahead? You sound like you lean a little bearish for the market as a whole, and I've given you some shit on stock twits a little bit about how bearish I think you are, but that's just our relationship. That's just good banter. You're completely entitled to your opinion, and I'm entitled to be wrong. I get it. So, but anyway, what are you looking at? What are you feeling? Are there any setups that you like? I don't know, Max. What are you looking at for the week?
So I am leaning towards chop. I don't think you're going to get breaking the highs or breaking the lows in the next week. I personally, I love a good bottom fish. We could pull up the arc chart. I wanted this. I wanted a 60 print down here to touch this level. But you have these back tests, and that's what kind of worries me is, you bounced up, you rejected, and then you had another tag of these supports. And I believe that the more times you hit something, the more likely it is to break. And so,
right,
because that's, the more people that have the opportunity to buy there, you have more people, on the trade with you. And what if those people are all wrong? So I'm a little bit hesitant to say, yeah, we're just gonna, V out of here, get into a new uptrend. And I'm optimistically bullish, I guess, but I see these back tests at this levels, and these wicks could be fake, and maybe we just gap up and keep going. But I have these targets, and so I'm kind of holding out for undercut of the lows. It doesn't have to happen next week, doesn't have to happen next month, but I have something that I'm looking at, and a lot of these index charts too.
And it looks like that's like July that could play out. And what is that? That's on RUT.
Yeah, this is IWM. But it's just I'm a little bit hesitant to be all in bullish here. So not really a good answer, but
no, I think that's fair. Charts for Charity is such a good resource of all different kinds of minds and different types of TA, different types of traders. I think one thing that we all kind of latch on to, other than try to find the best setup, is corrections can happen over price and time. And I think it took me a while to understand that as someone who was trading, but sideways is a direction, and chop often helps resolve what could be a continuation of an older trend or start a new trend to some degree. And I just think that's important to always think of. And we're basically, we started this in December. We had a little bit of a Santa rally for like 6 sessions. But really, I mean, the market's been at a top, coming down for a while now. And my thesis, me, I'm almost nearly as permeable as they can, but I'm a realist. I understand that, it's not always going to go up in the short to intermediate term. There's these lulls, and sometimes those lulls is where an equity or, the SPY or the SP 500 NASDAQ, whatever you're looking at, sometimes those chop is where I see that they get their legs, especially on a chart that goes from bottom left to top right. And maybe you have thoughts on that too.
Yeah, I mean, and every single dip has been a buy until it's not. But I look at the year we just had, the last 2 years, and you think about,
it's been crazy.
What are we going to do for the next year? I just can't see it. I can't see another 20% year. And also, I don't pretend to know anything about fundamentals. It just doesn't seem like we're in the same situation as we are in COVID. And so for us to just put on another 50% over the next few years from here, I just don't see it. it could happen, of course, and I'm not going to complain about it. I just don't see it. And we're due.
Well, if you haven't watched yet, go watch the TA report with GP and JFDI tonight. GP put together a very compelling case, I think, where the 10-year rising in rates really led to an explosion to the upside in particularly NASDAQ composite names and high growth. So it was quite an interesting study. So I'd recommend you watch it. It might give you, it might not change your mind, but it might give you a little bit different perspective of how it could happen.
Yeah. And I mean, there's plenty of stuff out there that can push this market up. I mean, there's names that have been completely decimated. And even for them to just rally up would be huge. But you also, like, one thing that kind of has me leaning a little bit bearish is if you take ARK as a leading indicator at all, right? You have this blow off move, and then you have this return to a long-term channel. And so if you're looking at it this way, if it returned back to where it was in this long-term channel, then what was to say the Qs can't do that as well? And they return into their long-term channel, which was going to be this blue line here. So we haven't had a blow off, but it doesn't have to happen.
Right. Absolutely. No, it doesn't. And that's why I say while I'm bullish, like, I'm open to the scenario of, the market falling off. I'm never going to be open to the scenario of the market going to zero. I like to tease around a lot with that, but I don't think that's ever going to be the case in our lifetime, but anything's possible. It could happen. As far as moves down, yeah, I mean, all your extended parallel lines there, they absolutely make sense. Those are points of support and resistance of the past, and price had, once price has done something once, it has a memory, as I think GP likes to say. It can go back there. There's no reason why it can't. It might take it a while to do it, but it can go further below, and potentially it can also go higher. So you got to be open-minded with that.
Yeah, of course. And you just take it day by day and see what comes.
What are you looking at that you really like right now, or just you really don't like?
I mean, I personally, I got some premium selling that I'm doing on SPY. I mean, I have some loser growth names that I have. One chart I really like is Centene. I've been holding this one for a while. Pretty steady healthcare name.
All it does is grind up.
Yeah, it's not a big mover. It's boring, but sometimes that's what you need.
Absolutely.
So, I had to break out the all-time highs, kind of holding up here. I think it looks good for 100.
That reminds me a lot of the Pfizer trade, not Pfizer, but the AbbVie trade that I was in. AbbVie for the longest time, very similar chart actually as to what Centene is. Not sexy, but when it broke out, then it's gone.
Yeah. Yeah, I mean, what's the market been rewarding is not the sexy growth names. It's the boring grinders.
Oh, my tech babies. Oh.
I know, and I got a couple too. If I had to pick one that I would, I'm bag holding this one, but Magnite, I do like this on a long term kind of into this zone. And this is an example.
I had to sell it. I had to get out, but I think this is great that you're going over it.
Yeah, and this is a good example where you have an uptrend on a long term and a downtrend on a shorter term.
Yeah.
And so you can use the long-term uptrend as sort of like a guide, but in the same time, you got to keep in mind, like, it's channeling downwards. And so you have these intersections, where you have, confluence of an area, like, this zone has been support. And so even, 20% move just from here, this would be like 50% just to back test the purple.
Yeah.
So
no, I liked it for the same reasons. And once it got around that 1280, I forgot what I sold it at exactly, but once it broke below 13, I was just like, No, I'm going to just put my money elsewhere. And if I can catch a move on this later, I'll still be watching. But yeah. But no, I like it for the same reason that you did. That's the same reason why I got into the trade was, hey, if this, it's been in a year-long downtrend. If it can just pop 10, 15, 20%, like that's an easy trade, but easier said than done, obviously.
Yeah, but these losses can get away from you really quickly though.
Shit, yeah.
Because let's say even just from October down here, that's 65%, right? And so you're gonna need 120% move to capture that back up. I mean,
and there are people buying up there.
Yeah, for sure. And people who still haven't sold. So yeah, that's the concern, right? Is as on the way up, you got all those people trying to get the fuck out of this trade. So
well, just from a psychological standpoint, I mean, everything from October, of last year, October of 2020 has been nothing but yeeting higher, right? Like, I mean, this was I'm looking at your chart. I'm not looking at mine. This is like a $7 stock that goes to, $80.
Seriously, it's 1,000%. It's ridiculous.
Or $63, whatever. I'm not like, again, I'm looking at your chart, not mine. But yeah, I mean, as a trader, especially someone who's new to stock market, and there's been a lot of people since the COVID lows who got into trading, like that's too easy, right? And like, I bought this thing for $8-9 and shit, now it's 62.5, right? Like it's never been better, but then for the last year it's been nothing but pain. You've almost round tripped it.
And even something like net, right? I mean, you got people that
I love net. I was in that from like 22 to 27.
And they bought it down here, and then it went 10x on them, and they never sold. And then now I'm down 50% from that high, and I'm going to sell now. Like, it's really hard. It's a really tough position. Or you wait for a blow off. I mean, you knew this was a blow off move. Yeah, it felt great at the time, I bet, for anybody long this thing. But
and they had earnings in there too that was crazy.
Yeah, it's the hard part. It is. It's the hardest part is trying to get out of it. And I'm in too early, and I'm always out too early.
So. I just like going on there and talking shit to the perma bears who are just like, oh, it's so overvalued and blah, 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 and holier than thou. And it's like, yeah, whatever, man. Like, it's a $200 stock now, so kiss my ass.
And valuations too, like, people could tell me something's undervalued, overvalued. I really don't care. It's market's going to tell you what is a good price that the stock should be at. And I don't care to know anything about fundamentals. I imagine they're important, but I personally don't think they matter. And I can't get myself to buy into oil or commodities. And people who are smarter than me have been telling me that's the right thing to do, and market's been telling me that's the right thing to do.
Yeah.
But I just can't get myself to do it. It's really hard, and I don't read fundamentals. I don't understand that, but market did tell you from a technical perspective that these things are in a downtrend. So you could have listened to either one, but breaking these lows, this is XBI, but breaking this base here, that was it. You should have gotten out. If you were long from here, bag holding. I mean,
so how do you set your sales on the way up or the way down? Do you just set a normal take profit or stop loss, or do you have a hard dollar figure in mind? Like, how do you look at that?
You talking about like an option short-term trade, or
no, like any of your common trades? For instance, right, I want to be out of Cloudflare at like 130 or 50%. I forgot what it was, but I already had that plan in place of this is where I'm going to sell a lot of my position. Or on the way down for Magnite, I think I let it run to like 15% loser. How do you go about that?
I don't use hard stops. So we'll talk about losses first. I usually try to be disciplined, and if we're using I do it on technical. So if I'm trading this XBI here and it's going to give me a close below here, it's probably going lower. So that's going to be my stop out. If I'm buying this level and it breaks this level on a closing basis, I have to be out. And
it's a clear stop.
Yeah. And so if you have a thesis for whatever you're buying and it fails, you need to be disciplined and take that loss. I don't like using hard stops because the market, flushes stops all the time. You can get whipsawed and get shaken out of a position. That's gotten me into some trouble before. And, I've learned to be more disciplined on it. Like, trading futures, for example, you can average down on something and, get yourself into a really bad situation. And a lot of people are scared of futures, but you shouldn't be. They're really powerful. I mean, you can trade the micros and, capture, one of these bars. I mean, look at the 40-point moves in an hour. You can make thousands of dollars on a couple contracts, and there's none of the downsides that come with options. You're not worried about theta, not worried about the VIX crush. You're not worried about any of that. I mean, you just have pure profit and loss. So that's how I am on like shorter term trades. Longer term trades, I mean, I have stocks that I'm going to own forever, that I'm never going to sell. But that there's no point in telling me when I'm going to take profit. I'm never going to take profit. But a lot of the things I do in an active account are going to be on the way up. You can use like a 168. That's pretty useful. So let's say you bought ES down here somewhere. You're looking at just the 168 of this range. It's going to be like right up here. So you would just take your profits at a fib extension. Same to Jeremy uses this all the time. I mean, this is a really good tool, and it's good for kind of marking where things could go and where they might stop. And who cares if it goes higher? I mean, you just take your profits.
What else you got, Max? I can share some charts if you want to, but I wanted to give you as much time as you wanted to go over anything else that you got.
I wanted to touch on just like, the beginning of a trend. So, we can take something, like a shorter term basis on this low that we had here. And I always like to view it as how many people are with you and how many people are against you. And so if you have this balance area down here where, market balances for, a couple of days, a week, if all these people there's shorts and there's longs in here, and how many people are right when it breaks out of the pattern and how many people are wrong. And so you want to also think about at the low, how easy was it to buy the low? How many people captured that moment? If you had a lot of opportunities to get fills down there, then you have more people with you. And so you're also got to think about when it starts to reverse and you get a retracement of that move, you have people that are riding that wave with you, and when's the right time to hop off. So another factor that comes into consideration on like how quickly you want to exit a trade is, who's along with that ride. And so this move right here, there's a lot more people getting into it as you keep going up. And so you think, well, the longer it goes on, maybe I should hop out sooner. And I also believe that, if you get multiple touches there's no such thing as a triple bottom, no such thing as a triple top. The more touches you get of something, it's more likely to fail, the more opportunities somebody has to buy that. And so that's, you had one shot at the low and it hasn't really gotten there that close. Like, sure, you could say it's close, but, you had opportunities to buy in here. So there are longs and there's plenty of people who bought here. So it's just a factor.
That Friday bounce, I mean, that was really quick. I mean, you had to be like dead eye sniper to capture that one.
Yeah. So just bringing in like, understanding who's with you, who's against you. That's important to consider when you're, deciding how quickly to get out of a position or how long to hold something.
Selling is the hardest part, man.
It is. Yeah, you can share some charts if you want.
What do you want to look at? I'm watching Bitcoin right now, honestly.
Another thing we can touch on is I use like volume profile pretty pretty well to
Yeah.
sort of identify where a lot of time was spent at a price zone. And so if you want to look at things that I think are really interesting, like something like XBI or Teladoc coming into these really large volume points of control where a lot of time was spent. So this red line is all time. This is basically all time VPOC or volume point of control. So you have coming into this level where these areas act as magnets and typically can be supportive, don't always have to be. But just to keep an eye on that, it came into this, it tagged it. If you wanted to take a shot, this is where you would.
Yeah, that's as good a shot as any to try to capture that. And then T-Doc the same thing, basically.
Yeah, same thing. I mean, this is like
what a beautiful chart that used to be.
Yeah. And you know, the thing is I just keep drawing these lower extensions. It keeps going to them, right?
Yeah.
So you don't know where the bottom is, but if
Kathy,
yeah, I don't know, man. You know, her stocks can keep dropping, but they're at a point where, you know, if you want her to be long, you should do it.
Yeah, it's a defined risk reward, right? Like there is an obvious point on the chart through the channels and another indicator that, hey, this is likely a decent buy, but you know it's pretty clear if it goes against you that it's probably not the right thing.
Yeah, it's a really defined risk reward.
Yeah, for sure.
That's what I like. That's the best buying position.
But no, man,
a rundown of different sectors that I think, you know, kind of dictate the S&P. I mean, XLF, for example, just run through some charts.
Financials.
Yeah, I mean, financials look really good. And what I think needs to happen, and this is kind of leaning more towards, you know, what happens next, is they haven't really had a big blow off move, and they can grind for years. I mean, this was like, you know, 3 years of just this grindy action. And so we could have that. But maybe we need to extend up here a little bit before we actually correct on the indexes. If I had to pick one, I mean, they're not at a bad spot. I mean, you have multiple tags of this, and you know they could really go.
Yep. Well, you know, coming back to what you were saying, when something keeps knocking on the door, right? It's going to get through. There's also instances of, you know, if you go back to that other area on the XLF where it kept knocking and knocking and knocking and knocking and knocking, and about after the 30th time it finally failed. So there are some instances of that, but I generally agree with you that the move is, you know, if you keep testing something, it's eventually going to go the way it's trying to go. But it's just something to be aware of.
Yeah, exactly. And so yeah, it's come up here a lot. And so this could be where it stops. But if I had to pick a sector, I would go financials. Same with healthcare. Healthcare looks really good.
Yeah, healthcare has looked good for a minute.
Yeah, you have, you know, retested the support. But again, like, you know, this just like the S&P, like it could come down here another 6%. You could get a tag of this long term. So I don't know. It's kind of
that would be a gift, though.
It would be a gift. So, you know, I'm holding out for that. If it happens, if it doesn't, then, you know, there's plenty of things you can buy to carry this market.
Yeah, no, that would be a gift if that happened. UNH is on my long-term watch list, and I would relish the opportunity. And I'm going to pull up my UNH chart while you're looking at that one.
Yeah, this one's just.
But yeah, I mean, if it came back into like 420,
yeah,
or thereabout, and I wasn't even looking at your chart, but that's what you got marked too.
Yeah.
If it came back into that 420 area, that would be a good spot to take a shot.
Yeah, I mean, you got a lot of time spent here. You know, and I also view it as, you know, market moves from balance to excess. And so you have balance areas, and then you have markets that, you know, extend out and proceed in excess. And so, you know, typically on retracements, they go back to areas of value and balance where that's a lot of time in.
Yep. That was like my Moderna trade a couple weeks ago. It was very defined risk reward. If it could hold like that 168, 170 area, it was likely to either hold or move, and it didn't. It fell below that, and I still think it's like, I want to say it's like 164 or 66 right now, 163.
I have a good Moderna chart.
So yeah, I mean, if you, what's the point in taking a trade if you're using a chart and you're not using your charts, right? If you have a point on your chart and you're not willing to trade that, what you see as a good opportunity, why are you even bother charting? Just go buy the spider or the QQQs and dollar cost average for eternity.
Yep, exactly. You know, if you're not able to achieve, you know, better alpha than the S&P, then what are you doing spending all this time and stressing over this, right? That's right, man. And I ask myself that question too sometimes.
Well, I mean, this was the first year that since I've been managing my long-term portfolio, that I didn't beat the S&P, and it was like, all right, where did I go wrong, and what did I do wrong? And some of them were like a Roku, like that was suboptimal, right? But you know, that's going to happen, and that's part of the learning process. And you know, you got to pay your dues if you're going to be in the market. Otherwise, you know, just dollar cost average those index funds.
Yeah. And, you know, you can get good trades, but stock pickers it hasn't been their market since beginning of 2021. So it's been, you know, over a year.
That's 100%. I think it might have been Big Greeny who shared the returns of hedge funds, and just about all of them. I think there were only a handful that actually beat the market. And it's like, these are the, I'm using air quotes, pros, right?
Yep. So maybe you feel less bad for underperforming.
Yeah. I'm like, my 20% was good, man.
Yeah. But, you know, some of these are coming into really good zones, like Roku. You know, if you wanted to take a shot, like it's in a zone where it's spent a lot of time.
Yeah. It's getting in a place where there is a defined risk reward. And I drew my fibs on Roku, I don't know how long ago, but anyway, once it failed that 223 area, that's when I said, okay, I got to go. That's the 0.382 fib. If it fails this, it's definitely going down to 236. And I don't want to be in this for another 60-point move to the downside, another almost 30%. No, thank you.
Yeah. Yeah, you don't want to hold through that.
No, thank you. I already broke my rule at like 329 when it broke the 618. And I was like, all right, it should bounce here at the 5. And no, it didn't. You got to respect your stop.
Yeah, you do. And so you just got to be disciplined with it.
Got to respect your stop. Hey, Max, Bitcoin's about to pop through 43,000.
Oh, yeah?
Yeah.
Pull it up here.
That's a big level. That would be over the daily 50 EMA.
Yeah, crypto.
It still needs to get, in my opinion, up to that 46,000, 47,000 area. The 21 weekly is up at 46,700 right now. So
yeah, you know,
it's looking constructive.
It is, and kind of as a leading indicator too. Like throughout the week, you saw Bitcoin leading, and then the market will follow. And that worked out really well on Friday. Saw Bitcoin up 5%, markets down. Well, you know,
I pointed that out last week when I saw it bounce midday. That was on one of the days that I don't remember what it was. I posted it on Stock Twits, and then I copied it in CFC. But Bitcoin made a turn, and then the markets kind of followed it. So I think right now crypto is more of a risk on indicator, and it's leading to the upside, just like when it was risk off, it was leading to the downside.
Yeah, and I mean it's been on a decline, just like you know.
Futures are down a little bit right now, though.
Yeah, for now.
Yeah.
But yeah, Bitcoin's been on a decline since November, just like all Kathy stocks. Oh, yeah, it's another puzzle piece, right? In the bullish camp.
Yeah, well, I'll share my screen really quick here. I showed this same thing to Nick and Gautam, but yeah, it was funny when Bitcoin hit.
I'll also just share before you do that on the
Yeah,
US
go for it.
dollar. This is
Dixie.
yeah, just this is a monthly chart, and I think this is I'm pretty proud of how clean this is. But on a long term, we're in an uptrend, and so you could be bearish on the dollar, but in a long term sense, U.S. dollar and stocks are actually positively correlated. So you think in the short term they're negatively correlated, long term they're positively correlated. They both go up together. And so just because the US dollar is going up is not a bad thing. Everybody seems to get all bearish when it goes up. But so, even if it puts it up at 100, it's, that's a good thing. And right now we had a monthly bounce, and now we're just looking for a monthly higher low. So
yeah, no, I think that's spot on, because we pulled up the Dixie chart on this Bitcoin that I'm about to share, to just show how it kind of behaved with the Qs and the spider. But yeah, no, you're 100% correct. But speaking of the leading indicator, so here was the chart I shared earlier, and well, I don't want to get too crazy in this move here. But right here was the spot that wrong line, Bags. Right here was the spot that the market actually led Bitcoin. It found the bottom first. See, Bitcoin still had some to go. It had a few more sessions to go before it finally found its bottom, and then it ripped. But right here, it took the lead first. You see where I'm going with that?
mm-hmm.
It took the lead, and it has led us up, and similarly, it led us down, right? Like there's the Bitcoin top, and sure enough, markets rolled over too. So I'm kind of looking at it that way, as if Bitcoin's going to lead us higher and be the first to bottom, which would be the indication, because it would have bottomed right there and the market still came in for a few more sessions later, we might have some more short to intermediate upside, but Bitcoin still has a lot of work to do. Like I was saying a few minutes ago, like I'm still looking for this area right here, this 47, which lines up with the weekly 20 or 21. Price has found and touched this area from the top and the bottom several times. So I want to see it get through there and get into that sort of green zone that I have marked. And if it's able to get through that, then we're definitely heading higher. It's constructive right now, but still a lot of work to do.
Yeah. Yeah, and you got the first thing that pops up here is you're just looking for a lower high. You had a big weekly down move, and the most likely scenario in my head is just to set a weekly high. And so from there, then you decide, okay, is it going to be some kind of equilibrium where you get into a balance, or is it going to be a downtrend?
Yep.
So
yeah, and this is what we talk about it from time to time at CFC. Like bottoming is a process, right? Like finding the bottom and reversing is a process. And the one thing that really didn't happen when you had this oh shit candle right here was there wasn't any more follow through below. That doesn't mean that it can't break down and there's not follow through to come, but it didn't. The bear had the ball in their court, right? And they couldn't take it down to 30, which I think almost everybody was expecting. Well, we're going to retest 30 at this point, and it didn't. So I just think that this is constructive. This is the first step, right? So we've got this level right here that's going to have to get over. We've got this level right here that's going to have to get over. And then eventually we're going to come back into, the all-time high resistance that we're going to have to work through. So I still think there's work to be done, but for a trade, if I were looking, and I don't trade Bitcoin, I only buy Bitcoin, only hold Bitcoin. If I were looking at a trade, I mean, I kind of like how this is setting up right here. We might have some of this action a little bit, but I think that would probably resolve. And, if we fall below this 40,500 again, your trade's probably off. So to me, it's a pretty defined area. If somebody was so inclined, if I were so inclined, I want to take that trade.
Yeah, no, it looks really good. Just make sure your expectations are set, not to go back to all-time highs.
Yeah, I don't think that's happening overnight. I mean, it's Bitcoin; anything could happen, but I would expect something like that from one of the altcoins or one of the shit coins to ramp like that. Not necessarily Bitcoin to do it.
Yeah, but I do really like it as a leading indicator.
Yeah, it's been working out. Hey, Max, we've been going for a little bit longer than an hour, man, and I greatly appreciate your time. I don't want to keep you on here longer than you had hoped or anything. So I really do appreciate all your contributions at CFC and what you post on Stock Twits. And, we have some playful banter back and forth on both formats, and I appreciate your friendship. Thanks for opening my eyes and letting me look at trades new ways. And I just really appreciate your time jumping on the pod here and just talking how you look at things and how you do things, man. I do appreciate it.
Yeah, no, thank you. All right. It was a great time. So thank you for having me.
Got it, brother. Thank you.